Shanghai branch, right? So are you following, Chandra, Christine,
Yeah.
Arone,
Yep.
Min,
Yes.
right? Okay, if you have a question, please do ask. So, and the third one is law, GAAP. We talk about GAAP and FASB. So, Financial Accounting Standard Board, FASB, GAAP, generally accepted accounting principles. So in case of financial accounting, you must follow the law, which is GAAP or FASB. So how you present the statement, first you need to write down the sales, and then you need to write down the expenses, and then at the end you need to write down profit. You cannot change the positions, right? First you need to write the current assets, and then you need to write down the fixed asset. So it's nothing happened that first you need to write fixed asset and then current asset. No, because it's not required by law, right? So financial accounting follow, must follow the law, right? But for managerial accounting, you don't need to, follow the law. Every company has its own internal reports. Every company has its own budgeting style, budgeting jargons, right? Some, just call this predictive reports. Some call it budgeted reports. Some call it forecasted reports. It's up to them, right? No law is required. You can make the, reports, easy or tough or, whatever you like. Every company has its own authority in this accounting system. The seventh one is the requirement. So it is required for external reports, mandatory one. You need to, if you make that one, you follow the law, you need to publish that one as well. It is required. But internal reports, they contain highly sensitive information. So it is not mandatory. In fact, you hide it from your competitors. So your competitors can find out, okay, their gross profit is like 40% and our gross profit is 20%. Wow, we need to copy their management style or their, whatsoever, right? Okay, they have these creditors or they have these suppliers, the name are over there, so they can copy their names and they can lucrate, they can give them lucrative options so that the suppliers turn towards you rather than your competitors, right? So internal reports are very sensitive and not basically, for external use. So that's why they are kept secret. So that's why you see the safe in manager's office. There are a lot of safe, the locker system over there, so that the information, they just sign it, they see it, and then they, maintain hard copies in a safe locked system, right? And even though they put it in their computers, they are encrypted, password protected, and different kind of stuff to maintain the security. Right? Any question regarding the analysis of financial accounting and managerial accounting? Or any question you want to ask? Guys.
I'm fine.
Okay. So I have a very nice video explaining all this stuff. So let's just watch that.
Advisors and service companies have all been adopting different approaches to improve their performance. A number of techniques were developed as part of a continuous improvement movement that has been embraced by corporations around the world. One of the most widely used approaches is Total Quality Management, or TQM. Total Quality Management has two key characteristics. First, a focus on serving customers. Second, systematic problem solving using teams of frontline workers.
Baylor's been very cutting edge in trying to maintain a TQM program. We probably started that, one of the earliest of the healthcare systems to begin implementing that program. And it's been continuing. It's changed names, it's been through several different iterations, but it's always there in the background.
TQM, it's a given.
But if you go back, I guess 10 years ago, 12 years ago, it was a big buzzword around here because it was something that we needed to focus on. And we reached a point where we felt that our processes and we're getting a lot more efficient. So you don't hear TQM anymore. It's something that's embedded in our processes rather than an initiative anymore.
In order to maximize efficiency and cut inventory costs, many manufacturing companies have now adopted the concept of just-in-time manufacturing. The idea behind just-in-time is to purchase just enough materials each day to meet that day's needs based on customer orders.
By eliminating the inventories and just producing when customers actually want something, you get enormous increases in operating efficiency. Your defect rates go down. You can respond much more quickly to customers, give them exactly what they want when they want.
On-time deliveries are obviously very, very important to customers. Most customers now have just-in-time type of procurement activities where they're looking for vendors who can basically ship and deliver product just in time so that vendor doesn't have to warehouse that material. They can take it right into their plant floor and utilize it. So they're looking not only for people who can deliver on time, but also looking for people who can actually deliver quality. And so now they are really pushing the quality requirements back down to the supplier. So we'll actually have customers come in to our plants and do inspections, and they'll qualify our plants based upon the quality systems that we have in place, so that when we do ship product to them just in time, they actually can just go right into the process without any type of quality inspection. When we look at cost reduction, basically just like with the business plans, that really is empowering the employees.
The concept has even been adapted by retailers like Radio Shack, who use JIT to better manage inventory.
If you went back 15 years ago, we didn't know what our stores sold until we took a quarterly inventory and found out what we had left. Today, we know at 6 o'clock the next morning what every Radio Shack store in America sold, SKU by SKU, and at what cost that they sold, what our gross margin was for yesterday.
Another continuous improvement process that many corporations have used with success is based on the theory of constraints. It's often described as finding and strengthening the weakest link in a chain.
If you increase the strength of the weakest link, then the whole chain is going to get stronger. And if you increase the strength of the weakest link enough, then that actually is no longer going to be the weakest link. And so then what you would need to do is find the next weakest link and work on it to improve it. So to improve this, to strengthen the entire chain, it's a process of identifying the weakest link, strengthening it until it is no longer the weakest link, then finding the next weakest link and strengthening and so on.
A more radical approach to continuous improvement is process reengineering. Instead of tweaking the existing system in a series of incremental improvements, every aspect of the system is mapped, questioned, and potentially redesigned. The goal is to eliminate unnecessary steps to reduce costs.
The idea is you're going to go in and you look at a business process. The business process is a sequence of steps that involve many, many steps and specific sequences and people doing specific things. So the first thing you do is you map all these out, and it is explicitly a map. It's a schematic that shows all the steps and how, when they happen and what happens in each step. You attempt to understand the present process, and then once you understand the present process, you attempt to identify steps that are really not necessary. They don't add any value in terms of something the customer is willing to pay for, but they add expense or they cause some delay.
The process can also be applied in the service industry.
Process reengineering has really affected us on the receiving end. Our corporate office has done several reengineering projects that have affected the services that we are being provided. From a direct financial standpoint, Baylor several years ago re-engineered accounting to be more of a centralized accounting service, accounting shop. We used to have a full accounting department at each facility. Those people, accounts payable, general ledger, fixed assets, payroll, for the most part, have all been centralized at a central location. That changed the service that was being provided to us and changed the role of the controller, the chief financial officer at the facility somewhat, and we were less involved in the day-to-day accounting services and operations and more involved in the operations and the services being provided at the facility.
Increased competition has changed the way American corporations do business, TQM, JIT, process reengineering, and other methods have been developed to satisfy the customer's demand for quality, flexibility, timely delivery, and value. Managerial accounting plays a key role in achieving these goals. Managerial accounting developed to provide useful information to management and other internal decision makers. Using both financial and non-financial information, managerial accounting provides timely data, including estimates and projections, that supports planning and decision-making. The importance of this information has increased as competition has intensified. As a result, corporations have come to rely more heavily on managerial accountants. To meet management's expectations, managerial accountants must now develop an in-depth understanding of all aspects of a business. Become a data hub for the company. Apply analytical skills to spot trends and provide forecasts. And provide insightful advice to top management. In short, managerial accountants today and in the future must be more than accomplished technicians. They must be agents of change. And
Okay. Any question regarding the comparison of accounting and financial accounting and managerial accounting? So you heard different kind of production system like just-in inventory, just-in-time inventory, TQM. So that is not relevant for this course. So that is just for like production functions and all the stuff. So that is just basically giving you the examples of how the system is now changing and how demanding the managerial accounting is now nowadays. So that's why they have explained all this stuff. Please do not confuse with yourself. You need to read the TQM, the process reverse engineering, and all those stuff. Okay. Okay. Any question?
No.
No. So here is the end of our first lecture, and we are just starting very slowly to understand all this. And in our next class, we'll talk about the cost concept and other stuff as well. So any question regarding today's lecture or any suggestion or anything you want to talk about? Chandra, Christine, Min, Arone?
No, sir.
Okay, then I'm going to be just stop the recording here. Here we go. Okay, class. And see you next time. Stay safe and please take care of your health.